Wealth isn't merely amassed, it's sculpted by those who dare to wield the tools of creation. The foundation of thriving in today's shifting economic landscape rests on cultivating the right perspective, a mindset attuned to transformation. Without this inner compass, preparedness for the tidal waves of change remains elusive. By embodying the traits of those who flourish in the profit-driven realms of the economic map, opportunities hidden within these upheavals become visible, paving the way for action that yields abundance. Consider a pivotal moment in late 1987, when a prescient advisor posed a question. Are you dabbling in property or equities? The response was clear. Neither. Just pouring effort into growing an enterprise. The reply came swift and firm. Wise move. Steer clear of markets for now. Focus on your venture. A storm's brewing. That year, a seismic shift struck with the Tax Reform Act of 1987. In a mere 43 days, lawmakers dismantled tax shelters that many relied upon to cushion their earnings. For those banking on property losses to offset income, the rug was pulled out. Losses persisted, but the deductions vanished. Across the nation, property values cratered, some plunging by 2/3. Panic rippled through the housing sector, shaking banks and savings institutions to their cores. Many collapsed, locking away depositors' funds. Then, in October 1988, the stock market buckled, plunging the globe into financial turmoil. At its core, the 1987 Act stripped away tax havens cherished by well-paid workers and solo practitioners. These folks, doctors, engineers, consultants, had leaned on real estate and partnerships to balance their books. While the downturn rattled everyone, those in the business building and investing spheres retained more of their fiscal armor. Workers learned a bitter new term: redundancy. Curiously, when companies slashed jobs, their stock prices often spiked, a paradox few grasped. Solo operators, meanwhile, grappled with dwindling clients, soaring insurance costs, and market losses, bearing the brunt of the Act's fallout. A shift of riches amid this strife, a grand redistribution unfolded. While the laboring and self-reliant suffered, those adept at crafting businesses and seizing investments reaped windfalls, as government policy inadvertently tilted the scales. By slashing tax gimmicks, the Act stripped away incentives for speculative losses, hitting high earners hardest. Professionals who'd been nudged to buy properties that bled cash, then funnel leftovers into stocks. When the loophole closed, wealth flowed from the toil-driven to the strategy-savvy, often at bargain rates. As savings institutions buckled under bad loans, billions hung in limbo. Taxpayers, already reeling, footed the bill for bailouts. The Asset Recovery Bureau emerged, tasked with unloading seized properties. For those with the know-how, it was a golden harvest, snagging assets at fractions of their former worth. Prosperity demands mental clarity, not just eyesight. In that chaotic era, fear clouded judgment. 3 fates befell the work-centric. Frenzy took hold. With emotions ablaze, wisdom dimmed. Jobs teetered, homes devalued, stocks tanked, and commerce slowed, blinding many to the bounty at their feet. Rather than hunt for gains, most retreated, hunkering down in dread. Skills fell short. Mastery of wealth crafting, financial fluency, debt maneuvering, capital rallying, eluded them. When the Bureau offered a trove once valued at $15 million for $3 million, few knew how to muster the funds or sift diamonds from dross. No engine ran. Survival meant harder toil, not smarter systems. A thriving enterprise, scalable with minimal sweat, ballooned from a seedling to a global network by 1991. As it grew, effort lessened, cash swelled, and time opened to chase deals aplenty. A tale of 2 eras. What defines a life isn't the events, but the lens through which they're viewed. From 1987 to 1997, some endured a nightmare, others seized a dream. That 1987 nudge from a sage voice unveiled a rare chance. Though cash was scarce, expertise in enterprise and investment birthed assets that unlocked freedom. A process later unpacked. Adaptability is the linchpin of a fulfilling journey. Yet, too many lack the agility to ride these economic currents. Optimism aids forgetting. After a decade, scars fade, only for history to stir anew. Cycles. Echo, the 1987 Act is now a faint memory. Workers and soloists labor harder. Their tax shields long gone. Advisors whisper old tunes, buy a grander home. Debt's your tax friend, and it's an asset anyway. Low payments lure them deeper into the red. A subtle wealth shift brews, not as expected, fueled by economic tides studied through history's lens. Funds still trickle from the toil-bound to the tacticians, as ever. Today, retirement savings, flood stocks, ripe for the shrewd to sell high when caution fades. A jolt, some headline or crash, will scatter the herd, letting investors repurchase cheaply. Another transfer looms, healing slowly as markets peak anew, prompting quips of, "Here we go again." A grand scheme? Some cry conspiracy. Elites, pulling strings via banks. Perhaps. Powerful clans wield vast sums, but a single cabal ruling all? Doubtful. It's more a clash of mindsets in a sprawling money game, each side playing by its own code. The labor-focused can't glimpse the builder's moves, while the latter track every step. Rather than learn, many hunt scapegoats, echoing medieval purges. Heroes rise in booms, silver barons, bond wizards, only to fall as villains when busts hit. Today's market darlings bask in glory. A correction could flip the script. Time reveals all. Blame shifts, but ignorance drives the loss. The game's name? Who owes who? Be the vault, not the teller in youth. A revelation struck. Wealth's secret is to act as the vault, not its keeper. Eyes open to unseen levers. Terms like lien, holdings, capital took on new weight. The game's rules emerged, ripe for sharing with the curious. Titans of industry, Carnegie, Vanderbilt, Edison, offered lessons via tomes like Economic Trailblazers by Laura Hensley, tracing capitalism's arc from Smith's quill. For the future-minded, works like Digital Riches by Clara Voss, The Free Citizen by Mark Henshaw, Wave Riders by Ellen Proctor, and The Next Slump by David Keane paint contrasting horizons. These lenses sharpen foresight, spotting market, swells others miss. Playing the Vault Post 1987, bargains abounded, properties, shares, firms at steep discounts. Focus narrowed to real estate for 5 reasons. Value slashed. Prices dipped so low, rents outpaced loan costs, slashing risk, like snagging half-off treasures at a bazaar. Leverage unlocked. Banks funded property, not stocks, stretching. Modest cash fare. A $12,000 stake could nab $120,000 in land, dwarfing stock gains. Tax haven. Property profits rolled over untaxed, with depreciation sweetening the pot. Unlike stock gains, clipped by levies. Note: viability trumps tax perks. Steady flow. Rents held firm, covering debts and buying patience for values to rebound, cushioning big loans. Vault ambition. Real estate let one mimic a lender, a dream since youth. Sculpting. Wealth, imagine a $120,000 home nabbed for $90,000, a $15,000 down payment and $75,000 loan. Marketed as urgent sale, low entry, easy terms, it sells fast for $120,000 via a rental buy deal. The buyer's $120,000 note becomes an asset, yielding interest like a bank's loan. Default, reclaim and resell. Risk shifts to the buyer, netting $45,000 created from thin air, hedged as the shrewd do globally. No sweat savings banks shun. Tax breaks for savings, their burden favoring this method instead. From that $45,000, interest often hits 12%, beating paltry bank rates. It's $30,000 conjured tax-free, bypassing the wage grind where half vanishes to taxes. Upkeep? The buyer's burden now. Shielded streams corporations guard wealth 2 ways, shielding assets from lawsuits via trusts, and filtering income to dodge taxes. Employees face earn tax spend. Owners flip it to earn spend tax, expensing pre-tax, like $500 monthly pet care, needing $1,000 as an employee. Rules matter, obey them. Land for nothing, seeking a rural retreat, 30 acres, pines. A brook, $85,000 felt steep with debt breaking the small personal risk rule. A better find, 95 acres and a cabin for $130,000. Terms secured. The cabin and 35 acres sold for $240,000 on easy terms, leaving 60 acres debt-free plus $20,000 cash after taxes, rewarded for risk well laid. The public play launching of firms' shares mirrors this, value crafted, split among thousands. Same game, grander stage. Experience trumps cash. Start with enterprise before investing. Business sense underpins all gains. Begin small. A $90,000 deal scales to $900,000 with zeros and savvy. Reputation grows, money follows. Sometimes none's needed when know-how shines. Simplicity prevails. The right side's mechanics, stocks, land, ventures, are straightforward. It's about seeing differently, defying the chorus of impossible. Find guides who say, here's how, and the path eases. Laws sway. The 1987 Act was a jolt, but more loom. Success demands tracking legal shifts. Vast codes evolve yearly. Mastery lies in mental vision, not just sight. As laws tilt wealth's flow, the state's hunger taxes fund essentials, but bloated promises strain the system. Politicians dodge truth, hiking levies as deficits swell. Retirement pots waver, health costs loom, ignorance fuels the next shift. History's whisper: learn the game, then wield it. Teaching stems from care. Dependence on firms or states falters. Hope dims for endless market climbs or job salvation. History nods to downturns, brace for them. Change as catalyst, a new age dawns. Fortune for some, ruin for others. Kennedy's call rings true. Shift beckons. Clinging to old job-centric creeds binds many. Freedom lies beyond. Fairness isn't the goal, choice is. The right side welcomes. All to play, win or lose, sans pity. Why the favored thrive. The crafty dodge taxes via corporations, borderless entities shielding wealth. Cyberspace now hides riches, untaxed by earthly rules. Laws align globally. Intent varies. Dual realms laws don't split rich from poor. They're wielded differently. Hire sharp minds, stay legal, and profit as shifts loom. Two paths: freedom offers security at a tax cost, or liberty through game mastery. Choose your field. Part 3 maps the swift ascent via 7 steps to the profit side. Build and acquire. Since 1943, payroll taxes nabbed workers' earnings first. The 1987 Act squeezed soloists, pushing them from property to stocks, shaky, ground as jobs thinned. The rich via C corporations and real estate skirt this, thriving as tax hikes spare them. Grow enterprises, snap up land, echoes from titans. Fortune's formula on the right. Keep learning. No one size fits all. Seek tailored counsel from those ahead. Tax perks are bonuses, not drivers. Global principles hold, adapt them wisely.